Hi guys and welcome to the trading show. This week we are gonna talk about
markets, cryptos plunge,
our portfolio, Nasdaq stable,
tip of the week, opening range breakout on Tesla,
and the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Animated week on the markets, especially in the cryptocurrency sector. So we start from Bitcoin, which in the last week loses more than 20%. And if we look more closely at the graph, we can see that over the last 2 weeks, it has gone from the value of about 60,000 down to a minimum intraday at 30,000. Therefore, an intraday drawdown of around 50%. Obviously, volatility is rising. We see high percentile values both in the short and long term. High levels of volatility also on the stock markets. In particular, we can see how the ranges in the last phase of the market have definitely widened. The indices do not, however, mark large changes. The strongest stock is still the DAX. We also note negative returns on energy, still negative returns this week on the cereals sector. All positive are mids, and I think there is not much more to report. On the implied volatility front, we generally notice a slight increase in volatility, but this spike dates back to the previous week, so we have more or less maintained the levels of volatility we saw last week. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week, instead of futures, I want to talk to you about stocks. And in particular here we have the 500 most capitalized stocks of the Nasdaq index, and the strategy has mainly two filters, we can say, calculated on the VIX index. We can see here the second data series, while the first one of course are the stocks. The strategy is a mean reverting strategy, and so it tries to look up for swings of the market. And we want that the VIX index to be in a sort of range, we can say, so neither low nor high volatility, but somewhere in the center. And this may help, of course, during high volatility, very high volatility, where the market in this kind of situation generally collapse. And also during very low volatility periods in which maybe the average trade is not so good for our purposes. Now I have already charged here the portfolio and recalculate it, because it takes a few minutes on the portfolio trader, and we can see that this strategy was developed in this period here, let me say November, December 2016, and from that point it performed really well. Of course, we have also seen some drawdowns, but now the strategy is at its equity peaks, and we are of course very happy of the behavior of this strategy. And also looking at the annual period analysis, we can see that during the years the strategy has behaved really well from the date of its birth, we can say. And also the total trade analysis shows that the average trade is around $100. And this means that the strategy has 1% of average trade, which is very good for this kind of markets that has not a very high, we can say, cost of transactions. So I recommend the usage also of these type of strategies that are continuing to perform really well. Also we can look at the daily profits, where we can see that the strategy gained around 3,500 and, as said, reached new equity peaks and continued to perform really well also in the out of sample.
Hi everyone and welcome from Andrea Unger. Today we will have a look to a strategy on the stock Tesla. Tesla has been listed on the Nasdaq exchange in 2010 and the co-founder of this corporation is the famous Elon Musk that created also other projects. And for what regards this strategy, I took the inspiration from the book of Toby Krebel, and this book is called Day Trading with Short-Term Price Patterns and Opening Range Breakout. So this strategy is basically an opening range breakout, and the basic rule of the strategy is to buy or to go short when the price breaks the opening price plus or minus 1.5%, calculated on the opening price of the day, of the same opening price of the day. And this strategy has other very few simple rules. In particular, we will do only one trade per day, and the start time is 11 a.m. New York time, of course. And the end time of the strategy is 2 p.m. Always New York time. And I've also added another condition that we call daily factor, and this condition basically is just the analysis of the directionality and the volatility of the previous session, and in particular we just calculate the ratio between the body of the candle of the previous session and we compare it with the range of the previous session. And this allows us to understand if the previous session was a choppy day or a directional day in general. But let's go then to the report of the strategy. The equity curve looks extremely interesting for being a very simple strategy. I remember you here, I'm working from January 1st, 2010 up to today, and the strategy rule is to enter with a quantity of cash per trade equal to $100,000 invested in every trade. So let's give a deeper look into the report. We have seen the equity curve is extremely nice, especially for what regard the long side, but also the short side is extremely good in general. If we have a very quick look to the annual report, we can see there is no negative here at the moment, so it looks really promising. But let's go then to the not good facts, if we can say so. The problem in this case, in my opinion, is the average trade, because if we calculate the percentage average trade compared to the $100,000 invested in every trade, this means the average trade is equal to approximately 0.3%. And this value, in my opinion, is completely unsustainable. In fact, I usually suggest on the stocks market to have to get at least 1.5 or 2% in terms of average trade, so in terms of average trade compared to the invested capital. So you can imagine here 0.3% is quite unacceptable, at least for me, and this is due to many reasons, and the main one in my opinion is because this is an intraday strategy, so the position may not have the necessary time to let the position grow enough to pay the impact of slippage and commission. But the idea in general seems to be promising, so you may try, of course, to go multi-day with this kind of approach, or in general to try other kind of breakouts on this stock, and maybe you will find the correct approach that is also sustainable in terms of average trade.
Rollover calendar. Next week the energy futures will expire, natural gas that we have already rolled, gasoline and heating oil on the 20th. As regards the currencies, the Bitcoin future always on the same day. And finally, I remind you that we are approaching the first notice day for American bonds, so during the next week T-Note and T-Bond will also be rolled. I hope you enjoyed this video, and if you want to learn more about the trading method we at Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger Method now. You pay only shipping and handling.